Kings and Queens, it's Sandra Fenwicky, your mortgage consultant. I'm coming on today to talk about bank statement loans. Now, I've done videos in the past about non-QM mortgages or non-qualified mortgages. Those are special mortgages that the industry has created to kind of be outside of the box and to help those people who aren't traditional borrowers. Now, as a self-employed borrower, we need your tax returns in order to qualify you for a traditional loan. Now, your traditional loan is your FHA, conventional, USDA, VA. We need your tax returns. And most of us as business owners, on our tax returns, we're going to have our earnings, deductions, expenses, and then at the bottom line, that is your actual income to the IRS. So that bottom line number is the number that we have to use in order to qualify you for a traditional loan. So most of us who are business owners, we have a lot of expenses and we have to write those off. So that bottom line number is usually too small for us to qualify for the home that we want. So the industry has created different loans like bank statement loans. Now, the way this loan works is you provide the last 12 or 24 months of your bank statements, and we're going to calculate all of the deposits going into that account for the last 12 months. So, and then we'll average that out, and we'll use that as your income. You can use business or personal bank statements. It doesn't matter, because some of us who are running businesses still get our bulk money deposited in our personal account. If we're using personal accounts, we can use 100% of those deposits. If we're using business accounts, we can use 50%. In some cases, though, you can use a little bit more because you might not have 50% expenses. So if we can prove that to the bank, then you may be able to use a little bit more money that's deposited in that business bank statement. So we take that and we put that together and package that as your income, which is fair because that's the money that you have coming in and you can afford to pay for the house that you want in most cases. So these loans, because they're out of the box, they're outside of the box, they're special loans, we're doing something that your traditional banks cannot do or will not do. So it's gonna require a little bit more from you. So that's in the place of a larger deposit. So you may need to put down at least 10%. Your credit score needs to be at least 660. And your interest rate is going to be a little bit higher because these are, I guess, I'm not going to say high risk, but kind of high risk loans because the industry looks at it as your business, something could happen and your business could tank in, or your profits can go down and you may not be able to afford this loan haul. So they make you put in more to make sure that, you know, the loan is a good investment for them. I tell everybody, this industry, banks are a business. It's a business. They're in this to make a profit as well. So we have to be mindful of that. So if you're ready, you have the money to put down, you don't mind paying a higher interest rate, because guess what? Still paying a slightly higher interest rate is getting you in your home. Putting down 10%, that's in your home. That's equity in your home. If anything was to happen, you can borrow against it or you can sell your home and get that money back. So it's not like you're losing, you know, you're parking your money in a safe place, which is your home that you live in. So these are great alternative loans. We do them all the time. People take advantage of them and I love them. So if you have questions about the bank statement loans, please give me a call. You have my cell 301-326-7555. You can leave me a comment on any of these platforms. You can DM me or you can go and start an application on my website. It's www.approvemesandra.com. Please like and subscribe and share this video if you think it'll help some people. Thanks, guys. Bye.